All right, what up, guys? So let's go Sunday. Let's do it. We are selling the US dollar index. I'm looking for the US dollar index to come back down to 111. Big red move here, big bearish move that happened at the 114.8. And that is the highest of the year. Highest of the highest so far. So I want to hop into the monthly chart and highlight this. This is still crazy though. Overall, it is still bullish. Overall, the US dollar has not made its way to even have a dramatic reversal. So since it's broken up new highs and it's still creating higher highs, this could be just a possible retracement and it could very well shoot itself even higher. So, I mean, I want to highlight some interesting candlesticks here, right? Especially this one that went down. This would be my way of going, inversing it back down, right? Reversal. You can see this is a big pinnacle move here with this candle, the doji one, all the way up here, all the way down, end up reversing down, creating support at 90. So 90 is a really crucial area to break through, but that won't be until, who knows, maybe a couple of years from now. And so I wouldn't get too caught up on saying, well, it should all go all the way back down to 90 in 2 years. Could it? Yeah, it could. I mean, that'd be a really big substantial, downturn for that means what? Inflation's going down, cost of goods are going down, the rise in the US dollar, the value of the US dollar is going to go down significantly. And I don't foresee that yet. So overall, it is still uptrending. What I really want to see is the US dollar come back up here, all the way up to 120. And to see if it's going to break even higher to 122 or maybe a possible 124 at the end of 2023 or maybe 2024. The way things are going, because they're still going to jack up interest rates. We got next month, a month. I mean, no, not we got 2 months from now, and then December. So we are coming into the fourth quarter of the year, and we're talking another 75 plus 75. So it's a 1.5 basic points increase, fundal interest rate increase. I apologize. So I don't want to get too much in detail into fundamentals, but the plan is this week is to sell the US dollar index based on the bearish candle going back down. Massive move going back down. Like I said, the peak was 114.8. We are down to 112.173. And this is the US dollar currency index on tradingview.com. US 30, all the indices have retracted back down. So very, very a significant move. Looking for hold on. Looking for US 30 to come down to let's see here. 28,000. I don't really see a significant I don't really see anything for buying at this point unless you really want to buy based on scalping, but that's all I would see if you were to buy. I would not be too crazy on buying this in the indices at this point. It's been coming down and it's still going down. So just don't get too caught up. We don't know what's going to happen, but overall, ever since it peaked, it tried to come back to 34,000, which it did. And this was August 15th of this year. And it's been down and it trickled all the way back down under 29,000. So looking for it to come back to 28 and 27,000 for this month. S&P is down, looking for S&P to come down at 3,500 to 3,400. And then NASDAQ, looking for NASDAQ to break 10,800 to 10,400. So overall, it is still downtrending. It has every time it's gone up, it's gone down even lower. And that's what I'm trying to say here. So that's weird. I had a bug here. So anyways, That is what is going to be interesting at this point because all the indices are going down. US dollar did go down, but like you said, always be prepared that the US dollar might end up going back up even higher. And matter of time, right? So we'll see how everything all plays out for Wall Street, all the indices. Gold, on the other hand, what I have for gold? What I have for gold, guys? Yeah. Hey, what? Oh, it actually do that. I apologize. I think I did. I apologize if I think I added gold on the daily. Oops, I apologize. I don't know where that's at. If I can find it, so this one gets to be deleted. All right, so I delete that. That one did not count. We have buy on the gold. Gold is peaking up at 1616, back to 1660. Looking for it to come back to 1680 to 1700. That is the price range I'd be looking at. 1680 to 1700 on buying gold at this point. We will see how much it's going to go up this week. Overall, if you were to draw a trend line, it is still going down. It is still on a downtrend. So just because it retraced back up at the end of Friday doesn't mean that it's going to be a massive reversal going all the way back up to 1800 or even possible 1900 here. So be mindful of that. Overall, US dollar is still bullish. US dollar is still inflating itself. And whenever that day comes when they plan on whenever the US dollar ends up crashing, but I don't really see that right now. So UJ, massive move going back up for UJ, looking for UJ to break 145 back to 146, and then maybe a possible move even higher, maybe 150, right? I don't know. So this pair has not given up its gains, even though it did give up its gains last week. Overall it is still uptrending. So don't get too caught up on trying to have a massive reversal sell on this pair. It is still uptrending. It is still on an uptrend. Has not given up its uptrend gains. Every time it's gone down, it's gone up even higher and higher. So just be very well aware of where this pair is going. The pound going down. Just kidding. Pound is going back up. We are buying the pound. This is a significant move here from 103 all the way up to the wick of 112. This is pretty substantial move. If you bought and held it, you made a lot of money, a ton of money. So I didn't hold on to it. I just cashed out right in between, but it was a really significant move on buying it at the beginning on Sunday opening. And if you held it all the way through till Friday, you made a lot of money. The Bank of England is trying their best to not crash their currency, even though it did came down pretty hard last week. So what? Oh, no, not last week, but 2 weeks ago, right? So this is their way of trying to revive their economy, especially the banking system of the Bank of England. But we'll see how that works out because they're just printing money. That's the other option. So we will see how this all works out for them trying to print money and stimulate the Bank of England here. I don't really see it, but like I said, don't get too caught up on this retracement candle. I just call it a retracement candle. Overall, the British pound is still on a downtrend just because it retraced from 103 to almost 112, right? I mean, that's about 9,000 pips. So it is a substantial bullish move, but they just did it so they could revive the banking system and also try to revive the economy. But we know that that's just short term. So just be prepared for this pair to end up going back down to this price at 103 or even lower when it does come crashing down, right? Because you got to break the bank. Break the bank like George Soros here. So anyways, Euro British pound, this is a massive move. This is by far probably one of the massive candle moves of the week if you were to sold off at 92 and held it all the way down to 87. This is like making more money than the pound. But like I said, the pound does pay more. So Looking for Euro British pound to come back down to 87 and 86 for this week. Now, it could very well retrace itself to half of this candle or half the wick back to 90 and 91, because if the pound does drop back, then this pair is going to go up. So this pair has been sitting quite a bit at the 90 to 88 range for quite some time here. And when we do come down below 88, we'd be looking at from 86 to 84. So I want to highlight as 87 and 88 as kind of like being in the middle if we were to just go off at the lowest to the highest. So for me, I would highlight the highest at 93. 93, and then at the lowest was down here like 82. So pretty close in resemblance of equal numbers here from 82 to 93. And we cut this in half. We're going down to like 88 and 87. So it's in between here. And it's a massive move down, but also be prepared for it to pull itself back up if the pound does come back down, which I do expect the pound to come back down. So they're just trying to revive the banking system right now by printing money. Who knows how long that's going to last, right? I see it as a short-term revival, not as a long-term. You can only print money for so long in each banking system. Trying to stimulate the economy, trying to revive the economy, trying to get the banks back up and going. It's just a matter of time. So like I said, everything is a ticking time bomb at this point, but I'm not going to go into too much details on saying, oh, we got to be prepared for a major crash that's going to happen this week. That's not what I'm going to be referring to. I don't foresee a crash this week, but just be prepared of the volatility that we're coming into play for this month and for the remainder of the year. And so, especially next month and December. Euro, we are buying euro, looking for euro to break $1 this week, maybe 99 and $1. Maybe we'll see how that plays out. So it came all the way down to 95, pretty much close to 95, came all the way back up to 98. So another substantial retracement move going back up. Overall, it is still on a downtrend. And like I said, when there is a possible reversal, I will say it, but to me at this point, nothing's really going to be stopping the US dollar. Nothing's really stopping the inflation of the economy and everywhere that and all the goods and services and supply and demand. And also the banking system hasn't really measured themselves in what they plan on doing, for remainder of this year and for next year. If it all comes back to the central banks trying to, manipulate as much as they can, trying to say, we're not really in a financial crisis, but we really are. It's a matter of time for it to unravel itself. Not today, not tomorrow, but over time, once we come in towards at the end of this year, things will start to unravel more. So just be prepared for that. USWIS going down. I'm looking to sell USWIS. USWIS came all the way up to almost $1. So I'm looking for USWIS come down at 98 and then 97 for this week. We do have non-farm payrolls this week, so we'll hop into the where's non-farm payroll. Non-farm payroll is this Friday on the 7th, so be prepared for that. UCAD, major move for UCAD. So UCAD is probably one of the very few US dollar pairs that are going up. Canada's taking a hit. The Bank of Canada doesn't know what they're doing. They don't plan on doing anything much to revive the banking system right now. I haven't heard too much of what Bank of Canada is doing. I know that I believe oil prices are still down. Yeah. Even though this is pretty crazy. Where I live at in Wisconsin, even though the oil prices are going down, right? The gas prices were still going up. And then it started coming down towards the end of the week on Friday. Now notice that Monday and Tuesdays, gas prices are like way up there. And I wouldn't be surprised if today gas prices are even significantly higher than yesterday. So that's what I've noticed. And towards like Friday is like the best time to gas up. I noticed that Friday's gas prices are down significantly. So That's what I've noticed. I mean, maybe you guys see something else different, because for those that live in bigger cities, don't see too much of a change in gas prices. So, but that's what I've noticed in the smaller cities that I live in. So, anyways, let's go back to U-Swiss. Yep, selling U-Swiss. Buying UCAD, looking for UCAD break 139 back to 140. There is no other resistance on UCAD until we come back, when it does come back up to 141 and 142. From there, we will see how high they're going to project this, and how high this thing's going to soar up to. Remember, the highest price that it ever came up to was in 2020, before the market went down. March 16th of 2020. This was right before, this was like a couple days before Trump announced the pandemic here in the United States. If you guys remember that. He announced the pandemic, like, I believe it was either 2 or 3 days after this happened. So, and follow this history back to the pandemic. So if this is the case, then I would expect USDCAD to go all the way up to 147, close to 147, where it peaked. And then we might end up seeing a correction, or the market shifting backwards for US dollar CAD. And this would mean that this pair is really following the US dollar index. When the US dollar index peaks up that high, when I talked about the US dollar index peaking at where is it at? Yeah, I mean, it peaked higher than that, but I'm not going back to 1980. It peaked at 120, 121. And then for UCAD to peak at this is a double top here and here, right? From July 2015, March of 2020, and we're looking for another substantial move for UCAD to hit the 147 again. This would be a triple top, and it could very well, do this and then hit up and do this and then hit up getting higher, right? So this is going to be substantial, right? And when it does happen, this is what I'd be looking at to see what CAN is going to be doing. What's going to be the downside factor for the US dollar, for the US economy at that time? Because by that time, we should be in 2024. And that's what I'm predicting. I wouldn't see too much move out 2023 unless something really major happens with the banking system, or maybe something really, maybe the housing market, but I wouldn't count too much on the housing market. It has to come back to the banking system, because the banking system controls almost everything, right? From the exchanges, stock exchanges to, right? Because they control where the money's flowing. That's the biggest thing. All the banks are controlling the flow of money. We don't control that. We don't know how much money the banks have. They say they have this, but the question is, do they even have that, right? So, and on top of that, where do we stash most of our money? In bank accounts. Unless you really have your own banking system, and you have your own big wad of cash in the mattress, then hey, by all means, that's on you, right? But I guarantee you that 99% of us, most of our money is stored in the banks. So banks control the money, the funding, the lending, right? So that's where it's at. But that's what I would be predicting for 2024, that USDCAD to retest the 146 and 147 before it comes crashing back down, what it did back in March of 2020. Okay, so, or I could be wrong, and it can then go and break out and up, even higher. Who knows, right? But this is very well established from what has happened in 2020, and also what has happened in January of 2016. This is nuts. So, and that was a double top, and this is a double top. So this is a pretty interesting pair to pay attention to when the US dollar keeps inflating. Okay. Australia and New Zealand, two of the weakest currencies. Well, I'll talk about Australia first. New Zealand is a lot weaker. Looking for Australia to come down to 63 and 62 and 61. The big move for it to come down to would be 58 long term. New Zealand has broken its weekly support. So it's broken all the way down to 50, under 56. It's at 55,948 right here. So there is no other weekly support until, if I can find it right here. I want to highlight this. All the way down to, I can't count this. What is it down? 50? All the way down to 50. So this is a substantial loss for the New Zealand. And this is pretty crazy because I talked a lot about the correlation of Australia and New Zealand, and then the inverse correlation of US dollar Canada. If US dollar CAD goes up, then Australia and New Zealand drops back pretty hard. And that's what I've been noticing on the inverse correlation setup. I don't really follow a whole lot on correlation anymore because most pairs are just pretty much moving on their own. Yes, there are times when they do move together, like euro and the pound will move together, or maybe UJ and all the yen pairs will fall together, but in vice versa in inverse correlation setups and looking for opposite pairs sometimes, and also in most times of what has happened during the pandemic until now, 2 years from now, 2 years ago and now, that the inverse correlation or the correlation setups aren't really there like they used to be, 4 or 5 years ago in trading, right? You could really count on correlation and how opposite pairs would divert themselves in a different direction, with other different pairs. Well, that's not the case. And I want to express that because a lot of people do look in correlation. I don't really look into correlation as much as I used to. If that pair is definitely dropping real hard, I'm just gonna focus on that pair. And then I will touch back base and say, you know what, if New Zealand's dropping this much, maybe I could sell Australia and then buy USDCAD. And there are times where Australia wouldn't not drop. There are times that the Australian dollar would not drop at all. Maybe because of fundamental, maybe because of unexpected news, right? And then when I do want to go off the US dollar Canada pair to go off the inverse correlation, maybe there are times that it doesn't even follow, the opposite direction. And so just be well aware that the correlation, I've talked a lot about this in previous videos, and I even made a specific video on this, that you don't want to rely too heavily on correlation all the time. Maybe that pair is dropping significantly because maybe the banking system is losing value and they don't know what they're doing, right? Maybe it's plummeting so hard because maybe the political leaders have, geopolitical tensions with other countries. I don't know. Maybe they might be striking a war with each other. Who knows? So that there's other factors that come into play when it's one significant country losing so much currency of their own currency value. So, other than that, that's all I got for you. I feel like I talked too much on this one. So, other than that, I'll see you guys in the chat group. Peace.